Now, in the last 24 hours, $58.5 million of Bitcoin was liquidated. This means that $58.5 million was lost in this market due to terrible, terrible trades by terrible, terrible retail investors. Now, I personally would listen to me. So there's a lot to get through today on the Bitcoin chart. To start off this video, we're going to be talking about the Bitcoin Spot ETF, which was released earlier this week. So in the last few months, Bitcoin has been going absolutely parabolic with no major corrections downwards. This was all in preparation for the Bitcoin Spot ETF that ended up releasing on the 10th of January. On the 10th of January, everyone was waiting in anticipation, and a tweet came out from the SEC saying that the Bitcoin Spot ETF had been released and that it was approved. This created quite a massive run-up in the price, about a 2.6% move. But right after that, a massive crash down, 6.2% down. This tweet actually ended up being fake and that the SEC's account was compromised, as in hacked. Gary Gensler then tweeted that the Twitter account was compromised and that the SEC had actually not approved the Bitcoin Spot ETF. This caused massive confusion, and here was when Gary tweeted about this fake news. So what actually we saw was that once the Spot ETF had been released, a massive sell the news event occurred. So did this Gary tweeting about the fake news stop this move to the downside that was actually going to occur? Well, maybe. Because a day later, the Bitcoin Spot ETF actually was approved, and we saw this massive run up to the upside of about 7%. Everyone here thought we were going absolutely parabolic and to 52,000 straight away in 1 hour, but what we actually saw was a repeat of what happened with the SEC fake tweet. We saw a massive move here to the downside, which ended up being a sell the news event. Bitcoin Spot ETF actually does create some good and positive news to the crypto space. It allows massive, massive amounts of money from massive, massive corporations flow into this market, which we could actually see as a big move for the next bull run. In the first 24 hours, massive amounts of money flowed into the crypto space, yet the price still went down. So the Spot ETF will probably work well, just maybe not right now. Maybe for the future bull runs, but at the moment, this is not looking good for Bitcoin. Another interesting thing I wanted to show you guys was the Bitcoin Fear and Greed Index around the Bitcoin Spot ETF releasing. As you can see, this is actually a 1 hour difference from these two tweets. And when Bitcoin was sitting at $46,500, the greed index was sitting at 73 out of 100. As price jumped to 46,600, only a $100 difference, the fear and greed index increased by 3%. This was just an interesting thing I saw and realized that the market is completely overbought. Now, Jim Cramer, who hosts CNBC's Money Show, predicted that the major Bitcoin top is in. Major. Now, is this true? Let's dive down into the charts. The glasses are definitely coming off for this. Okay, so before I get started, I just want to explain to you guys how I trade. So I trade using something called Elliot Wave Theory, which I kind of mentioned back in my welcoming video. I just want to give you guys a brief little dialogue saying how this actually works. So what we track in the market is we normally track a 5-wave move up. This 5-wave move up is often followed by a 3-wave pattern down. An A wave, a B wave, and a C wave. This would create a larger wave 1 and a wave 2. So this wave 1 can be set here. This whole thing would be a wave 1, a wave 2, then a wave 3 and a 4 and a 5 would follow. Right? We can see this at different subdivisions. We can put this at submicro. So this wave 1 consists of 5 individual waves. This wave 2 consists of 3 individual waves. This wave 3 consists of another 5 individual waves. Wave 4, 3, and wave 5, 5 again. So as you can see, all these are subdivided. Now in this little wave 1, as you can see here, that goes from 0 to 1, would also be another 5 waves up. And in this little wave 2 would also be a 3-wave move down. This is the most basic form of Elliot wave that I'm just going to show you for this video. Just to keep in mind that this wave 3 from 2 to 3 is always the sharpest move. Now each of these moves have different targets. We use Fibonacci targets in Elliot wave, and each of them have their own target ranges. These target ranges can be used to set up different supports, different resistances, and especially set up our trades. So until now, we've been tracking this massive third wave to the upside. Recently, I do believe this third wave is over. We have moved a massive, in this third wave, about 103%, which is quite a substantial gain if you were to have entered in this second wave. Now, we're going to get into the short-term price analysis. So at the moment, the wave 3, 4, and 5 of this giant wave 3 has indeed finished. This will now need to create a giant wave 4 down, and then a giant wave 5 up. So I do believe we are in the making of this wave 4, and there are a few things that are going to be altered on the chart. In this wave 5, we tracked a 5-wave move up to the upside. You can see here that this wave 2 came perfectly into the target range of a wave 2. This is the target range box of a wave 2, from the 0.5% to the 0.786%. So we also then tracked a wave 3, a wave 4 down, and a wave 5 up. At the moment, as I explained earlier, the wave 4 is an A, B, C structure, a 3-wave move. So we can actually put this as an A wave down, a B wave that I believe is now in the making, and a C wave down. At the moment, we are consolidating due to it being weakened. Weakened really doesn't make much market moves. Recently, Bitcoin has been doing a little bit of movement on the weekend, but nowhere close to where we were in the bull market. We have here tracked this 5-wave move down in the A wave. This now should have a 3-wave move up in the B wave, as I said before. We can delete that. So let's actually remeasure this target wave 4 just so I show you guys how I do it. So we can go to the 4-hour time frame, and the target for a wave 4, which is this giant wave 4 here, is going to be the 0.236 to the 0.5 Fibonacci ratios of the wave 3. So we can measure this as taking it from the bottom of the wave 2 to the top of the wave 3 and resetting these Fibonacci levels. 0.236, 0.3 to here. We can just make this a bit shorter for us. So the target move for the wave 4 should be 42,000 to 35,100. We can go back to the 1-hour time frame and track these waves. So we actually have hit the minimum requirement for a gigantic wave 4. So this bullish scenario would be that we have a massive run up here in a 1, 2, 3, 4, and a 5, leading us straight into the 50s, 60s, $70,000 level. But I don't think this move is done. I think there is another dump to come. So this B wave, so we're going to set this as the bullish scenario. We can add this wave count here. The bearish scenario at the moment is that we still come down in a C wave from the B wave high, which has not been completed yet. This B wave consists of 3 waves: an A wave up, a B wave down, and a C wave up. As we can see here, this A wave consisted of 5 moves, so this A wave should consist of 5 moves. This B wave consists of 3 moves, and this C wave also consists of 5 moves. These patterns can get quite complex, where different wave counts do different things and multiple different structures occur in the market, but I'm not going to get into that now. So at the moment we're tracking this A wave up, which A waves don't really have a target range. They can go between the 0.382 and the 0.618 of the previous correction. So we don't really try to measure A waves up. But once this A wave is indeed completed, which if it is now, we are in the B wave coming down. So if this A wave is completed, we'd have a 5 wave move in the A wave, which should be 1, 2, 3, 4, and 5. This 3 wave is sadly not long enough to have this A wave completed. So this 3 wave move should extend. This fourth wave should go about there, and fifth wave should extend to there. This move is likely to happen on Monday when the markets are back in action. So this third wave that we are tracking should go to about the 1.618 zone of the wave 1. So if we take the length of the wave 1 to about here, down to the top of the wave 2, we should see the third wave going to about the $45,128 level. This will then be followed with a retracement and then a 5th wave move up. This move will complete the A wave. We can change this to the bearish scenario, which is in white. So yes, at the moment we're tracking this A wave move to the upside, and then it should follow with a 3 wave move to the downside. 1, 2, 3, also consisting of an A, B, and C. At the moment we're actually sitting in a overbought area, so this price could come much further down. So the wave 2 might not be completed yet. This wave 2 might end up being a triangle pattern with a breakout point at the wave 3. So if we zoom further in, we can maybe see this triangle occurring. And yes, as expected, there is a triangle in the making, something like this. Around this, so this breakout should lead to the higher degree wave 3. So let's move to the 4-hourly time frame and just see where our RSI sits. Yes, so as you can see, on the 4-hourly time frame, we are in an oversold area. This means that this time frame can push the price up, which we should see in a wave A. Now let's talk about trading positions. To trade a wave A, B, and C correction can sometimes be quite dangerous. If this B wave is in the making at the moment, this is the most unreliable wave to trade. Please do not trade a B wave. A B wave's target can be massive. You can also get an overshooting B wave. So we can end up having a B wave that is all the way to the wave 3 that looks like a massive wave 3 and that everyone gets super bullish, and then ends up doing a massive correction to the downside. I think that is unlikely, and I think we might see a downside relatively soon due to the previous price action. I do recommend that if you want to trade this move to the downside, you scale in from the giant wave 4. So how we scale in is we normally scale in similar to a triangle pattern. You can see here at the original target, we can set up a very, very small percentage of our position, let's say 10%. We can then, as the price goes lower into this target range, hit multiple different percentages of our percent to have a long set up for the future. Now, I know all this looks quite complex and that the markets can make very complex structures. We can go from flats to triangles to diagonals. Now, all these you will learn by watching my videos over time and experiencing how the market moves. Thanks so much for watching. Subscribe to the YouTube channel so you don't miss another video. And you can also join my Discord channel down in the description. My Twitter will also be in the description, where I also post all my trade setups. This is Max Trades Crypto. Cheers.